Hello, good morning and welcome to this brand new edition of the newspaper show right here on ET Now. I'm Shil D'Souza and I'll take you through the top headlines as they're on the Economic Times as well as the Times of India. So let's get going with the top headlines as they're on the Economic Times this morning for you. And first up, you have Google that will invest $10 billion in India over 5 to 7 years. A big headline coming in from Google and showing faith in India. Moving on then, you have Prime Minister Narendra Modi who spoke to Sundar Pichai of Google. He also spoke about data privacy with the Google CEO. Moving on, India Inc. is set to raise record $30 to $35 billion this year. You have banks' fundraise rush may stoke defaults. Talking about auto financing, and that has taken a back seat. Mini shutdown hurting consumer sales. Moving on to Mukesh Ambani is the 8th richest ahead of Sergey Brin. TV broadcasters are seeing a resurgence in advertising. Talking about COVID-19, Bharat BIO begins human trials for Covaxin. And India-China Corps commanders may meet today. So those are the top 10 headlines that's there on the Economic Times for you. Let me talk about the top market headlines that's there in the Economic Times. And first up is LIC gains market share despite COVID-19 gloom. You have task force to mull reforms to boost IFSC. Analysts are saying that DMart still has an edge over the peers. HDFC Bank probes lending practices at its unit. And lastly, Morgan Stanley downgrades India to equal weight. From market on to corporate headlines then, we have what we have for you this morning. First up is double-digit fall in PepsiCo's sales. But remember, the global giant has also beaten estimates despite the double-digit fall in its sales. L&T takes on board Sarma and two others. You have Tesco that will that's putting more money in grocery JV with Tata's. Glenmark has cut price of the COVID-19 drug Fabiflu. Ecom and logistics bring back blue-collar jobs. Alright, and those are the top headlines that's there on the Economic Times this morning for you. But let me get going with the top story that we are going to track, and that is a story that's there on the front page, and this is what I'm going to talk about, and that is India Inc. is all set to raise record $30 to $35 billion in share sales this year, and this is as per an internal estimate by JP Morgan. What else does this report talk about? I have my colleague Pankaj Podar joining us this morning. Good morning, Pankaj. A record share, I beg your pardon, India Inc. is all set to raise a record $30 to $35 billion in share sales this year.
Absolutely. And, if you look at this year itself, it has so far already been, one of the record years with about $20 billion already been raised. Of course, Reliance, AGF tomorrow, the big fundraising has already happened. Kotak Mahindra Bank, you had a great deal which came in. The likes of Bharti Airtel have come out and, raised $1.5 billion. And names like HDFC Bank, maybe HDFC AMC, where the promoters actually, came down with, some sort of things. Is something also which essentially led to this 20 billion sort of fundraising. Now, this could be a record year, of course, led by these deals that have already happened. But you have ICICI Bank, which is expected to raise funds. You have Axis Bank, which has said they will raise funds. A lot of mid-sized companies are approving fundraising, especially from the financial space. And even large NBFCs are exploring fundraising options. We had one IPO which got opened yesterday, so that itself is raising. So investors are once again focusing on fundraising. This could be one of the record years with $35 billion, already about $20 billion, which has happened from this fundraising.
All right, Pankaj, thank you for taking us through that particular story. And definitely $22 billion has already been raised so far this year. Top share sales was RIL, Kotak Mahindra Bank, HDFC Life, HDFC AMC, Bharti Airtel. And about $6 billion is all set to be raised in the next 2 months. Let's shift focus now and let's talk about banks. And you are seeing a massive fundraise coming in on that front as well. But what does that indicate? Here you go. It's on the front page of Economic Times. And I have my colleague Varun joining in to take us through the story. Varun, on Economic Times, the headline reads that banks fundraise rush signals likely surge in defaults. So take us through the story.
Right, Cheryl. So, if you're a bank, there's two reasons, or there's really one reason why you raise money every 5 years, and that's to grow. Which metric do you track, which tells the bank when it needs to raise money? It's called the capital adequacy ratio. Now, in India, this ratio is supposed to be above 11%. If it comes below 11%, as a bank, you're required to raise money. Let me just give you some interesting data. Kotak Bank has a capital adequacy of 17%. ICICI Bank has a capital adequacy of 16%. HDFC Limited has a capital adequacy of 17%. M&M has a capital adequacy of 19%. SBI has a capital adequacy of 7%. So every single bank has sufficient capital adequacy except Yes Bank. Yes Bank is the only one which is just about 9% and they need to raise. So the reason the paper this morning is telling us that we should expect defaults is because all these banks who have 17, 18% means they have thousands of crores lying around that they're not lending out. So why would you go right now and raise more money? It's obviously because there is some tension you're expecting to come into your loan book. You don't know what it is now. You're not going to know what it is in 1 month or 2 months. But in 3 months and 6 months, once the COVID impact gets fully digested and these corporates start to face problems and they can't pay you back, that's when you as a bank will see the issue in your books. So this is all a preemptive raise. They're happening at lower prices. Let's remember Bank Nifty has underperformed Nifty. 3 months back, the bank stocks were worth much more. So if you wanted to raise, you could have done it then. Today you're raising at a discount to what the 3 or 6 month average prices are. So it just goes to show you that banks are not even concerned right now that they're raising money at lower prices. They just want to raise the money because they don't know what's going to happen in the loan book. So that's what I think the story is saying this morning. Be aware, some defaults might be coming, and that's why all these banks are raising money despite having sufficient capital adequacy ratio.
All right, thank you for taking us through that story in detail, Varun. Let's shift focus now from banks to the consumer space, and first, it's on the front page of Economic Times, and this is the story that my colleague Vinny is joining in to talk about. Vinny, the headline reads, the consumer sales go off track once again. So what is the story all about? I thought the sales were picking up.
Cheryl, you were absolutely right. Since the last couple of weeks, we have seen all the news talking about how consumer sales are picking up and, consumers are coming back. But that mainly had a factor of also pent-up demand. But now due to, lockdowns again in certain cities and, local authorities are taking certain lockdowns, we are seeing some pressure on the businesses of consumer goods, electrical goods, automobile sales. All these are slightly impacted is what experts of the industries and the sectors are saying. Now, if these small intermittent lockdowns continue, they could further also impact the company more because, they cannot plan their inventories. How are the inventories going to be? What is the situation over there? Also on weekends in certain areas like UP, Karnataka, Punjab, they still do not have normal activities and they are completely shut down during the weekend. So, we have Metro Cash and Carry who said that, weekend sales have dropped by 30 to 35% in these states. And, that is a big concern for these companies. As pent-up demand is also flattening down. So now, if these lockdowns continue, that further impacts the company's business. Even in mobile phone, retailers have said that in July, the sales have dropped by 30 to 40% from June. So that is also already a big jump. And now further, due to these closures, they are seeing further impact on the company. Even Godrej Consumer Products said that, if these lockdowns continue in these intermittent areas and, like Pune, Bangalore, which are in lockdown state right now, this could, impact the company. Though they have adequate stock, but demand is not there. It is impacting the consumer sentiment as well. And, in turn, if there is no exemptions for FMCG goods and all, then that would further impact FMCG companies as well. So that is where we are seeing certain concerns, and that is also impacting the consumer sentiment. So we'll have to keep a close eye on how the demand actually pans out in the next couple of weeks as well. And, was the demand actually and the sales actually there, or was it just pent-up demand?
All right, Vinny, thank you for taking us through that story, and that the consumer sales have gone off track once again, and this is due to some closures coming in once again, lockdowns coming in certain cities. Let's shift focus now to another story that's there on the front page of Economic Times, and this is pertaining to Hindustan Aeronautics. What is actually saying is private companies have told government that to keep HAL out of naval copter plan. I'm joined by my colleague Vivek to take us through this story. Vivek, good morning. Interesting piece coming in. The private corps have actually told government to keep the PSU HAL out of naval copter plan. And is this because of they want a level playing field?
Well, good morning. So this particular piece of news actually pertains to the fact that, a lot of companies, including private Indian companies, are in the race or are in competition to go ahead and build a little over 100 naval choppers. And this is going to be in collaboration with foreign tech providers, given the fact that Indian companies still do not have all the necessary tech to go ahead and build the naval choppers. However, in order, as you rightly mentioned, to have a level playing field, what a lot of the private companies have requested the government is that, they want HAL to be kept out of this particular process, given the fact that, number one, HAL has a very strong order book, especially in this particular field. And the other worry is that HAL may use their strong order book to go ahead and cross-subsidize the bid with other nominated orders. So on the back of this particular development, what private companies feel is that HAL will have an undue advantage. And especially in matters of strategic national importance, you generally tend to see, public companies having an upper hand. So if you're talking about some of the names, Bharat Forge, Tata Aerospace, Mahindra Defence and Adani Defence, all of them are in the fray and all of them are interested in this Make in India initiative that has been started by the government. However, given the fact that if the presence of HAL may ensure that the level playing field is not there, what they are asking is that, HAL to be kept out of the naval copter plan. It is going to be interesting to see whether this indeed does happen. However, some of the companies, including Bharat Forge and HAL, could be in focus on the back of this particular development.
All right, thank you for taking us through that story, Vivek. Now on to page 5 of Economic Times, and this is what I'm going to talk about. It is about Bharat BIO's COVID-19 vaccine that they are going on for, and they've begun the human trials for Covaxin. Bharat Biotech has started the first phase of human clinical trials for India's first COVID-19 vaccine candidate, Covaxin. Covaxin is being developed by Hyderabad-based Bharat Biotech in collaboration with ICMR. ICMR is Pune-based National Institute of Virology, or NIV. Volunteers of 14 locations across India currently are undergoing what is termed as safety and screening to study, to check whether there is any infection or there is any all the liver functions are fine, to see if they have possible exposure to COVID-19. And after an all clear, the subjects would be given what we call as a naive status. This would mean that they can be administered small doses of the vaccine. This is as per senior ICMR official that is spoken to Economic Times. So ICMR NIV has also added an additional protocol of conducting antibody tests on volunteers. The India's first vaccine candidate to be tried on 1,500 persons initially. So there you go. Bharat Biotech steadily moving ahead with the vaccine trials, and they are going to begin the human trials. They've begun rather their human trials of Covaxin. Let's shift focus now to another story that's there on the page 5 of Economic Times, and there you go. TV broadcasters are seeing resurgence in advertising. So the TV broadcasters, like I mentioned, are witnessing a revival in advertising on their channels after going through the worst ever quarter in terms of ad revenues, and many hope that they will be able to reach the pre-COVID level inventory levels by next month. There is a marked increase in advertising volumes with the return of fresh programming on GECs, as general entertainment channels, and some live sports. That's as per industry executives. So there you go. You have TV broadcasters. They are slowly seeing a resurgence in advertising. So in their road to recovery, the broadcasters are expecting to reach a pre-COVID level by August. Absence of fresh programming on GECs and live sports were hurting the channels. You've seen steadily they have actually started with live with live sports and fresh channel contents. New genre, however, witnessed a major jump in viewership. 80% drop in ad revenues in April and May was witnessed, and 60% decline in the revenue in June. So as of now, you are seeing some resurgence in advertising because in ad revenue all thanks to you seeing a fresh programming in the GCs and some live sports event. All right, then let's shift focus now to another story that's there on the Economic Times, and it's on ET Markets page, and that is about Mukesh Ambani. You've seen the stock hit record high day after day, and that's also adding on to Mukesh Ambani's wealth. Where does he stand globally in the rich list? I'm joined by my colleague Jayesh to take us through. Jayesh, Mukesh Ambani seems to be scaling new highs when it comes to a billionaires list.
Good morning. That's right. What we are picking up from the Economic Times report is that with yesterday's price surge in Reliance Industries stock, his net worth has now surpassed $70 billion, which has pushed him to the 8th richest person in the world, overtaking the likes of Warren Buffett as well as Larry Page and Sergey Brin, which are the co-founders of Alphabet, or Google as it is popularly known. Now, it's very interesting because it has happened just about a couple of days ahead of the big RIL AGM that we are tracking, which is scheduled for tomorrow. What we also, pick up is it took exactly 40 years for Reliance to actually reach 6 lakh crores market cap. But from there on, it has taken just about 4 years to double from there. So yesterday's market cap was in excess of 12 lakh crores, which is, the biggest or the largest market cap company in India that we have. Of course, all of this is because of the surge in the RIL shares that we have seen, which have jumped more than 28% so far this year, as compared to the 11% decline in the benchmark indices. So that is exactly what we have been, on top of. That Mukesh Ambani has slowly and gradually climbed up the stairs of the billionaires list in the world.
All right, Jayesh, thank you for taking us through that particular story. Let's shift focus now on to Times of India and page 11. And this is the story that my colleague Utkarsh will be talking about. And that is used cars and bike sales grow on fears of public transport due to COVID-19. Utkarsh, come in here and take us through the story. Definitely something that most of us were expecting, that people were apprehensive of using public transport. And there you go, you're seeing the trickle down into sales.
Exactly. Yeah, we all have been saying that there will be two markets which will be really getting a boost because of this. One will be the two-wheeler market, and the new two-wheeler market, because two-wheeler as an industry does not have a big and organized used market. But in the second-hand market, players like Mahindra, True Value, First Choice, in the initial days itself, they are looking at an increase of 10 to 15% is what many players are claiming. That is the level of growth which they are looking at. At a point of time where the other car makers, on the other hand, the fresh car makers are looking at a huge decline. Obviously, also you have to realize the fact that the second benefit what the car makers have, used car makers, they have the stock with them in their yards as we speak at this point of time. On the other hand, the car makers, the new car makers, they're not able to produce. So the basic idea here is that people are now looking to not use public transport, and slowly and gradually as offices are opening, we are looking to start commuting. But Ola, Uber, shared cabs, public transport, buses is not something. Which are the two areas we are really seeing growth here? One is the two-wheeler market, especially in the rural areas, because that is also that is something which a lot of people are going because they do not have the bus stop which is running. But on the other hand, when you look at the urban markets, despite the public transport functioning, there is a safety concern at this point of time, and people have come to a realization that it will take 3 to 4 months at least. This is what we're talking about, a minimum, normal, and that is why the used car market is in demand at this point of time.
All right, Utkarsh, thank you for taking us through that particular story. Let's shift focus now on to an Economic Times exclusive interview with Sundar Pichai, and there you go, it's on the front page of Economic Times. And Google will be investing, like we know, $10 billion over the next 5 to 7 years via the Google for India Digitization Fund. Sundar Pichai is saying that it's a unique opportunity given where India is poised. We are looking forward to working with Indian businesses of all sizes. He's also going on to say that we'll deploy funds through a mix of equity investments in large Indian companies, startups, partnerships, as well as infra investments such as data centers. So he's saying that definitely that the opportunity, this particular investment provides an opportunity to directly make larger investments in bigger companies. So this is the word coming in from Sundar Pichai. Also commenting on the equalization levy imposed by India, Pichai says that he favored adoption of the OECD framework to tax foreign digital transactions. So there you go. An exclusive interview coming in the Economic Times with Sundar Pichai, the Google CEO, and Google is going to invest $10 billion in India in the next 5 to 7 years. Let's shift focus now to Times of India and the top 5 headlines coming in the Times of India. And first up is India's COVID-19 count tops 9 lakh mark. You have Mumbai's recovery rate is at 70% and lowest increase in Maharashtra cases in last 6 days. The retail inflation or the CPI inflation has risen to 6.1%, and IMD has issued orange alert for Mumbai.